The fourth place in this ARK Invest Big Ideas 2021 paper is taken by digital wallets. The slogan here is digital wallets represent a $4.6 trillion opportunity in your pocket. 4.6 trillion US dollar is the figure that ARK Fund forecasts to be the value of the market capitalization of this sector of the fintech industry. We believe, they say, that Venmo, Cash App, and venture-funded startups are likely to upend traditional banking by activating the mobile phones, the bank branches, in users' pockets and handbags. First of all, let's see what is the definition of digital wallets. Here in this introduction of the white paper, Cash App versus Venmo, that I remember you, Cash App is a service offered by Square, while Venmo is a startup that has been financed and bought from people. I put the link in the description if you're interested in this paper too. But here, there's the definition. What is a digital wallet? They define a digital wallet as a smartphone-enabled financial ecosystem that provide access to a variety of services, including wealth management, insurance, instant payments, and crypto assets. We've seen a lot of debate in this new crypto asset and crypto portfolio uh, industry that grows obviously with the growth of cryptocurrencies and is very volatile because of that. But the big part is this: instant payments. People do a lot of payments every day. Payments we do every day, both online and offline. Today, they say digital wallets are beginning to penetrate the full traditional financial services stack, including brokerage and lending. Brokerage, I want to remember you: Interactive Brokers, Ameritrade, eToro, Robinhood. Digital wallets could serve as lead generation platforms for commercial activity beyond financial products. According to their research, digital wallets are valued between, in this moment, the beginning of 2021, uh, between 250 and $2,000, more or less, per user. But they could scale as soon as their importance increases to $20,000 per user average, representing a 4.6 trillion opportunity in the US, just in the US, by 2025. What's interesting about this paper, it's not that they have a scenario of 30 years. They see things that are happening very quickly in the long-term perspective, obviously. Like usually, if you as you've seen, as you're going to see also, they have a long-term vision of 5 to 10 years, so it's middle term. So as we can see here, they don't just see an increase of the users base, but also of quality change, an increase of the value per each portfolio, per each user, as soon as each people are going to use these instruments more and more. After the forecast about the US, they talk about China. What's happening in China? Well, in China, this industry is doing really, really well. The performances are great, and what is important to look at here, is the progress that this industry has made in the past just 7 years. Okay, it was almost completely irrelevant. Is the purple one in this bar chart? Almost irrelevant in 2013, and in 2020, the past year, it is nearly 3 times the size of China's GDP. This is how big this thing. is become. Here we have a good map of the main players of the industry in the whole world. Uh, they're in group by continents, and well, in as far as I can tell, in Europe, I've been here about Lydia and Revolut. Lydia about some French friends that I have that use it, and Revolut for the advertising on YouTube pre-rolls. I never used any of the two. Um, but we have some big names, especially as we said in the US, Cash App from Square, Venmo from PayPal, Robinhood, as you will have heard a lot about this online trading, which is also a digital wallet app. But there are others that may be known for other reasons. So because they are companies that have been bought or created by other bigger companies like Alipay in China from the main Alibaba, led by Jack Ma. WeChat Pay. WeChat is the main social network used right now in China. Uh, and we have a similar situation in South America with Mercado Pago. And I will remember you that Mercado Libre is the main e-commerce platform in South America. Here there's a big one. There's a big one because they show the competition that digital wallets are having against the largest financial institutions. And this is just what has already happened. Like this is not 2020. This is 2014. This is 2020. So this is the situation we are living in right now. We have a situation in which the annual active users of apps like Cash App and Venmo are almost, in the case of Cash App, and more in the case of Venmo than the annual users of JP Morgan Chase deposit accounts. We This is just to realize how big this thing is. It's already okay, but the potential of the growth still remains. It remains very high. Just consider that JP Morgan Chase is the biggest bank right now in the US. Looking at the financials and the fundamentals of the business, they say digital wallets can acquire customers for a fraction of banks' customer acquisition costs. They have reduced costs, and this is a good point to make because they can expand at a lower cost. This is what it means. They can reach people paying less than what a normal bank or what a normal financial institution uh, would would have to spend. So they say that's a roughly $1,000 is needed for a financial institution to acquire a new checking account customer, while digital wallets invest only $20 thanks to viral peer-to-peer payment ecosystems, savvy marketing strategies, and dramatically lower cost structures. You can see a comparison of the volume that it takes to acquire new clients. Here again, about the increasing costs for banks. Bank branch costs are rising while their utility is decreasing. So bad news for for traditional financial institutions here. Costs are going high and utility decreasing. Besides, digital wallets have, have entered a new market, the unsecured lending market. First of all, let's see together what an unsecured debt is. Unsecured debt refers to loans that are not backed by collateral, which means that if the borrower defaults on the loan, the lender may not be able to recover the investment because the borrower is not required to pledge any specific assets as security for the loan. Digital wallets are entering this market, suggesting that traditional bank lending is unlikely to recover to the peak it in 2019. You can see in this third part of the graph how much the share of this market has gone into the hands of digital wallets. I mean, they forecast for 2025 that digital wallets will have something around 50% of the market. That will have a side forecasted for 1.4 trillions of dollars of that. Here they go into the details of how of how the digital wallets could actually reach a value of $20,000 each. They break into the different uses that the user um, will different things that the user will do with the digital wallet. Main thing, first place, offline and online commerce, because direct payments are used also for offline. So e-commerce is not just uh, the for the e-commerce, right? Even if the e-commerce is just gonna go up. So then you have and normal payments, insurance, personal credit and mortgage, saving and spending account, and last but not least, brokerage. Obviously, the percentage of these different shares may change on the nature of the app. Just to give you an example, we have a good chance that brokerage is gonna have a value of more than just a 5% for at the app of the digital wallet of Robinhood, right? Because it's directly related to the brokerage account. So Robinhood itself will have the incentives to promote the brokerage use of the platform. But this is for the average, and this is what the forecast is. Looks realistic. So summing up the numbers, if each digital wallet users will be valued at $19,900 in 2025, with an estimated base of users of 230 million. The US digital wallet opportunity will be worth $4.6 trillion as a confirmation of the first figure that they presented for this sector. This is the dimension that Venmo, Cash App, Robinhood, and uh, Chime have today, and this is the potential. And this is the slope of the growth right now. Right now we're here, and this is what the forecast is for 2025. A third question at this point might be, okay, Kathy Wood, ARK Fund are telling us to invest in this sector. This is a big trend. But what are they exactly investing on? What are the exact companies they're betting the most on? Well, we have the answer for you. This is the list of ARK Invest ETF, FinTech Innovation ETF, ticker ARKF, top holdings. And the first place is taken by Square. Second place, Tencent Holdings, which has a big payment system in China, Tencent Pay. Fourth place, Mercado Libre. We named it before because of Mercado Pago, South America. Then you have obviously PayPal Holdings that also owns Venmo. Then you have Alibaba Group Holdings with Alipay and so on. But this will surprise you because there's a company among this that is not just in this ARK ETF. It's also in another one, which is the biggest ARK ETF. Is ARK Innovation ETF, ticker ARKK. And this company is, you can discover it soon, Square. Square is the fourth biggest stake in the biggest ETF that ARK Fund has. Just to give you an idea of how much these things count for ARK. And believe me, these things matter a lot for ARK because the performance that the market price of ARKF, the fintech innovation ETF, has had in 2020 was 108% returns.